I think the crypto market has been limping along since October 10th. On that date was a negative shock. Today's stock market looks a lot like an echo of what happened October 10th. But on October 10th, that liquidation was so big, it really crippled market makers. And our market makers are critical in crypto because they provide liquidity. They act almost as the central bank in crypto. And if prices fall, they've got to then do more selling. So I think that this drip that's been taking place for the last few weeks in crypto reflects this market maker crippling. We're only 6 weeks into it. Crypto, Bitcoin and Ethereum are in some ways a leading indicator for equities because of that unwind and now this sort of limping and weakened liquidity. As crypto prices drift lower because trading volumes drop, so this is then that reflexive weakening.
Today, as the recent crash in crypto has investors worried, with Bitcoin falling below $85,000, while Ethereum sits below $3,000, the crypto market remains in limbo. As crypto investors continue to speculate as to whether we'll see a price drop in Bitcoin and Ethereum in the coming weeks, this crypto cycle is heating up. And Tom Lee remains bullish, with a parabolic rise in the last few months of 2025. Forced selling, leveraged bets, and the usual tug of war we see when an asset approaches such a huge barrier. The bigger picture looks very different though. Analysts are drawing a striking parallel. Ethereum today may be in the same position Bitcoin was back in 2017, when it rocketed from $1,000 into the financial spotlight as Wall Street started paying serious attention. And just like Bitcoin back then, Ethereum is now catching the eyes of institutions, hedge funds, asset managers, and major investors who see its role extending far beyond speculation. Bitcoin has been trading more like a risk asset lately, meaning if the market recovers, Bitcoin is expected to surge alongside it. But the uncertainty is key here. If the market remains stuck in limbo, Bitcoin could face short-term pressure. The community is buzzing, and adoption is spreading across industries from decentralized finance to stablecoins. Even the regulatory environment, often seen as a stumbling block, may be tilting in Ethereum's favor. That makes Ethereum more than just a digital currency. It positions the network as a backbone of future financial infrastructure. And as Tom Lee points out, this is likely just the beginning. With Wall Street's deeper involvement and retail energy still strong, Ethereum's growth story has room to run. The question now isn't if Ethereum will climb higher, but how fast it can write the next chapter in crypto history. Let's get right into the latest interview with Tom Lee, as he gives his market prediction for the days and weeks ahead.
In 2022, it took 8 weeks for that to really get flushed out. We're only 6 weeks into it. There's a lot of what they call automated processes in crypto. One of them is called ADL, okay, and that's an automatic liquidation feature that would take place if someone's account or their collateral drops in price. It's essentially like a margin call. On a specific exchange, a stablecoin's price varied from other exchanges. Stablecoin should stay at $1. It dropped to 65 cents. But that only happened within the exchange quotes, within this exchange because of liquidity. That triggered an ADL, an automatic liquidation across many accounts. It wiped out, as that spread across other exchanges, right? Because liquidations cascade, almost 2 million crypto accounts got wiped out, even though minutes before they were actually profitable accounts.
Who's the they in the market makers and they got hit? Who's the they?
Well, I am aware of names, but because I'm not someone who wants to name names, I think what you should keep in mind is that this error is actually essentially a bug, a code error, because I think in retrospect, they would have pulled pricing from across exchanges to set the price for that stablecoin rather than rely on internal quotes. But this has resulted in a lot of market makers and traders having less capital. And as you know, as crypto prices drift lower because trading volumes drop, they need to then have more capital available, which means they shrink their balance sheet further. So this is then that reflexive weakening.
I can't stand the term glitch because things go down at the airport and they say, well, a glitch caused your flight to not take off. That's not a glitch. That's more than a glitch. It's a word that is used to describe pretty serious automation issues, software problems, crashes, for some reason that they try to minimize. Is this some kind of a software bug that's causing part of this?
Yeah. I mean, Brian, it is. I mean, for instance, in 1987, portfolio insurance was the, quote, glitch. And that triggered the cascade in 1987. And so the industry learned and then never offered that again. In 2009, it was really the collateral wasn't secure in real estate in these packaged subprime mortgages. Now, the industry learned and they recoded that. I'm talking about Wall Street, but then regulators came in and overregulated. That was the negative effect of that. In crypto, this code of ADL and the way they pull prices is never going to happen again. The good news is we're not going to have overregulation in crypto, but now we have to deal with that liquidation effect. 2022 was a big liquidation, and it took 8 weeks. But that is kind of, you're right. It is the nature of DeFi where there is going to be code and there's going to be an error found. And you said it, leverage is what's dangerous. And so investors should not be using excess leverage in crypto.
In 2022, we had what you would call a 6-week washout, maybe because of this, again, not using the word glitch, this software or coding problem or mistake. 6 weeks later, we know what happened. If you bought then, you made a lot of money. Do you still think we are in a washout period in an overall bull market?
Yeah, I mean, I can tell you a few things. Whether we're talking to macro funds or to crypto funds, they are sitting on piles of cash. People are sitting on their hands because they know there are these plumbing problems and these crippled market makers. They're not going to try to be heroes and step in here. So when we look at those prior corrections, even Bitcoin in the last few years, Bitcoin last year had some really ugly corrections. Each of them had the recovery, right? The rise from the low was faster than the drip to the bottom. So if we've been suffering through 6 weeks of Bitcoin falling from 125 to 88, and maybe it goes to 77, right? Maybe that's the low, and Ethereum bottoms at 2,500. The recovery from there to all-time highs will be faster than the decline. That's what happened in every crypto decline, because what you have is all this spooled up energy. People are sitting and waiting, and there's panic selling, forced sellers, but the buyers are being patient. That's what will happen. And again, you guys kind of hit it on the head. MicroStrategy is probably the most important stock to watch right now because that is the Bitcoin proxy. It's the most liquid name. It seems to me that when in the crypto world, when they're trying to hedge their longs in Bitcoin and Ethereum, they can't find any other way to hedge it except shorting the liquid stocks.
Ethereum isn't just holding its ground, it's starting to pull ahead. As 2025 winds down, Ethereum has actually outperformed most other major crypto assets, driven by record on-chain activity, surging developer adoption, and growing institutional demand. While Bitcoin continues to anchor the market, Ethereum's momentum is signaling that it could be a real leader in this next phase, setting the stage for what analysts call its strongest run yet. Embracing an unyielding enthusiasm for the Bitcoin realm, Tom Lee confidently predicts that explosive growth is looming on the horizon, as BlackRock and many other crypto giants are doing just that. Tom Lee reassures that a long-expected surge awaits. By the end of 2025, there will be 1.1 billion active crypto wallets. The pace of growth is hard to comprehend, and it will be the fastest accumulation of wealth we have ever seen. This is the conclusion of a career's worth of research. And every single chart and piece of research leads to the same conclusion. Liquidity drives everything, and crypto will be the best performing asset of them all.
MSTR, that is the company formerly known as MicroStrategy, now just known as Strategy. The stock's down 50% in 3 months, Tom. It's down about 65% from its highs. Is MicroStrategy down because Bitcoin is down, or is Bitcoin falling in part because the strategies of the world, the Michael Saylors of the world, have to sell the crypto because their equity is going down?
Well, again, because of my world in research and on BitMine, we are really plugged into all the trading desks and all the clients that trade. Anybody who has a sizable Bitcoin long position, okay, let's say it's more than $1 billion, they have very limited ability to hedge it in crypto derivatives, like calls. The max they can do is maybe 5% of their holdings. And then if you go to traditional CME exchanges, their contract sizes prevent someone from hedging $1 billion portfolio. However, someone can use MicroStrategy's options chain, which is so liquid, to hedge all of their crypto. So MicroStrategy is essentially absorbing all the hedging pressure that the crypto industry is trying to do to protect their Bitcoin longs. So the reason MicroStrategy is a leading indicator, it's actually the only convenient way to hedge someone's long is to short MicroStrategy or buy puts. That's what we're seeing today. Actually, MicroStrategy at this level here probably is when you want to ratchet into the longs. And Bitcoin maybe just a few $1,000s lower. Markets peaked and staged a pretty sizable decline with a 3.5% decline into the close. And that took us down 1.6 for the day. Now, again, I think many people are disappointed because NVIDIA had great numbers. So what caused this reversal? Bitcoin has been selling off recently and generally has led the equities. But you can see at the open, Bitcoin peaked and began to weaken at 9:30. And the S&P followed basically an hour later. This has been the case for some time. It's something I've pointed out, that Bitcoin has been leading the S&P. For instance, Bitcoin peaked on October 10th. That's right before we had that liquidity shock, which ended up being the biggest liquidity shock in the history of crypto, wiping out more than 2 million accounts. And Bitcoin's been falling since. But as you can see here, this has led to the S&P spider peaking on October 29th. And, it's something I was interviewed on CNBC today, and I mentioned that since October 10th, there was this feature called ADL that caused a significant amount of liquidations, and it was really due to a pricing error. But that pricing error has has created significant holes in the balance sheet. In other words, the reason crypto has continued to have lingering weakness is that market makers who play a critical role in crypto have weakened balance sheets from that liquidation event on October 10th. Now, market makers are essential to crypto liquidity. They're essentially acting like central banks because they provide liquidity. And their pulling back is the equivalent of QT for crypto. So you can imagine crypto is suffering from tightening conditions along with a hawkish Fed. Now, in 2022, when a similar event happened because of FTX, it took 6 to 8 weeks to recapitalize those market makers and for market function to recover. So we're about 6 weeks into this process. The fourth factor is Oracle and CDS, because there was quite a lot of chatter about this. As you know, there's many skeptics of AI, people even questioning NVIDIA's numbers. But what's catching people's eyes is Oracle's credit default swaps are rising.
Where does all of this leave us? Ethereum has crossed $4,000, weathered short-term volatility, and is now attracting the kind of institutional attention that once catapulted Bitcoin into the mainstream. Analysts are increasingly framing this as Ethereum's 2017 Bitcoin moment, where the groundwork laid over the past decade finally meets global recognition and capital inflows. But here's what makes this cycle different. Ethereum isn't just competing as a digital currency, it's the infrastructure powering decentralized finance, stablecoins, and entire ecosystems of applications that regulators and institutions are beginning to take seriously. That combination of utility and adoption is exactly why many see $5,000 and beyond as not just a price target, but an inevitable milestone. Over the past year, Ethereum has quietly outperformed most other major crypto assets. Tom Lee and other top analysts emphasize this point. Ethereum's real growth story is still ahead of us. With Wall Street leaning in, developers innovating faster than ever, and adoption spreading across industries, Ethereum is positioned to be a defining force as we head into 2026. The bottom line: the short-term swings may grab headlines, but the long-term trajectory is unmistakable. Ethereum is evolving from a promising blockchain into a cornerstone of digital finance and technology, and if history is any guide, the breakout we're seeing now could be just the opening chapter of Ethereum's biggest run yet.